Joining me now is Miller Value Partners, Bill Miller IV. Bill, good to see you. Thanks for coming on. Always good to catch up. I'd love for you to kind of set a framework in terms of what has happened that bears on crypto investing space in terms of policy and in specific ways why you think that's going to be helpful from here as opposed to it being kind of the thing the market was kind of working toward and handicapping all the way.
Yeah, so 3 landmark pieces of legislation advanced in the past couple of weeks. First, the Clarity Act, which is meant to provide regulatory clarity on how regulators and various agencies oversee various types of digital assets. Second is the Genius Act, meant to regulate stable coins. And then third is the anti-CBDC Surveillance Act, which is meant to prevent government overreach in the creation of a central bank digital currency. But one of these that's the most interesting to me, I guess, would be the Clarity Act, specifically because I think the way that it was written grandfathers in certain blockchains and advantages them relative to what would happen if they were launched today. So if you look at the way the legislation was written, it allows technologies like Ethereum and Solana blockchains to be classified as decentralized when they're actually not. And if they were launched today, they would go through a much different process than they're going to go through now that they're being grandfathered in. Now, whether or not this technology ultimately gives these other blockchains enough of a step forward on Bitcoin remains to be seen. It is my perspective that the underlying technology will ultimately win the day. So if you look at these grandfathered in technologies like Ethereum and Solana, they're proof of stake technologies. And what that means is if I have a big stake in the blockchain, I get to say what happens. That's exactly how society works today, and it's not really a technological revolution. What's so different about Bitcoin is the governance of it and its proof of work consensus mechanism. And so we tend to believe that the energy intensivity that's tied to new creation of Bitcoin is a game-changing technology. And so, you can speculate as to why things like Ethereum have had this pop in the past few weeks. That's my perspective, is because this legislation has helped them have a leg up. I don't think at the end of the day they're going to win.
So I guess this would enable essentially the way it all comes together is the government is now saying we are not going to declare certain of these crypto activities to be contrary to regulation as it stands right now. In other words, it's a tacit endorsement that this stuff can exist in this form and can continue to develop. But develop toward what? I really think is that an issue still? Or is it just, hey, Bitcoin, because of all the attributes you mentioned, is a great store of value and can continue to be?
Yeah, well, that's exactly the question. People need to start thinking about what problem these various blockchains solve. And the answer is most of them don't actually solve any real problems except Bitcoin. The problem that Bitcoin solves is really simple. The least accountable party, which makes the most promises that it can't deliver upon, gets elected and put into office. They then follow through on as much promises as they can deliver. And in the process, they create new ledger units, right? So in this case, you look at the deficits going through the roof. This isn't a Reddit thing or a blue thing. This is just a process thing. And the problem that Bitcoin solves is that accountability issue exactly. You have a currency whose supply protocol is laid out clearly ahead of time. You have 24/7, 365 visibility into who owns what, where capital's going. And that's just not the case today. So if you think about what problem these other technologies solve, the answer is it's really nothing at all. Bitcoin already solved it. It's already got the liquidity, the attention, the momentum behind it to keep going. And it's got this first mover advantage that's very hard to catch up to at this point.
And then, you've been kind of ahead of the curve in terms of implementing that view through owning things like Strategy, MicroStrategy, which, these companies that essentially they raise cash to buy Bitcoin, do it in a leveraged way, do it in a way that they can finance pretty well. Now, Strategy's gone kind of sideways in this last little while. I wonder if there's anything changing in the market's reception of that approach.
Yeah, I don't think there is. Stocks bounce around, technologies bounce around, prices bounce around. It's my take that in 20 to 30 years, every company might be a Bitcoin treasury company. And the reason for that is what I just mentioned. The underlying protocol for what we're representing as value is much more stable in Bitcoin than it is with fiat technologies. So We own strategy. You look at the deal that Michael just did with STRC, many, many times oversubscribed. And what I think is likely to happen moving forward is people are going to look around, and the bond managers that are buying the Bitcoin-related bonds are going to outperform the ones that don't. And the equity fund managers that buy Bitcoin-related stuff are going to outperform the ones that don't. And people are going to keep looking around and going, how do I do that? Oh, I buy stuff that's tied to Bitcoin. And so, and then they're going to actually do work on it, which most people still haven't actually done. And it's just going to snowball downhill, which is what we've seen for the past 16 years.